go ahead and tell us a little bit about yourself, what it is that you do. So yeah, go ahead.
Okay, my name is Ruth Principe. I'm with Synovus Mortgage. I'm an affordable housing specialist with the bank. So I deal with all things down payment assistance related, first time buyer related. While I can do everything that the bank offers, I can give any loan program, I can work any loan program. My focus is first time buyers with down payment assistance. So I'm very well versed in all of the programs that are going on in the area and the state bond and all of that stuff. And I promise that there's money out there. So if you're talking to a lender and they're telling you there's no money, that is not true. And please don't use your 401k. There's just too much money out there for you to use a 401k.
Are you finding people having to use 401k to help with the down payment?
No, I usually stay out of their money unless I like to stay out of their savings and their 401k because that's a someday fund. And I want to make sure that I set them up to succeed, not to fail. So if we wipe out everything they have in their world to get them in the house, there's no stress like money stress. So my concern is having them in the house and now they're trapped and they're concerned. This is the first time out. I don't want anybody worrying like that because then the next moment, you know, if one little thing goes wrong, it can just turn your world upside down. So
yep.
Try to stay out of the borrower's money with the exception of earnest money deposit, appraisal cost, that kind of thing. Their inspections, of course, are something we can't cover.
Sure.
If there's anything left over that they need to bring in, it will be minimal.
That's good news. And a lot of people, I think, especially first-time home buyers, number one, they may have little to no knowledge of, number one, the home buying process. And then almost absolutely, they're flabbergasted when they hear like, oh, there's money available that can help me out with my down payment. So Ruth, why don't you go ahead and just tell us a little bit about what DPA is initially. Let's go ahead and give that definition to everybody.
So DPA we refer to is down payment assistance, meaning money that's offered by a state or local municipal program. It will give you basically the down payment and part or if not all of your closing costs. So for instance, there's a $15,000 program available through Hillsborough County. I can use some of that for down payment and some of it for closing costs. If we run short on the closing cost side, that would be the only time that we would need you to bring any money in, or maybe the seller to help or get a gift from a family member. But I try to cover everything, and they've moved their assistance up to $15,000 because of what's going on in the market to help our first-time buyers be more competitive with offers. So it's very helpful.
And down payment assistance, is it free money?
Not necessarily free money. It's zero interest money. So there's only a few of them that are forgiven. City of Tampa is one of the ones that's forgiven, but most of the other programs are not forgiven. So it's just going to sit there in second place and hang around and not do anything. It's not accruing interest. It's not doing anything. If you sell, you refinance, or you move out of the property, it's not your primary anymore. That's when that loan becomes due and payable. So it's technically a loan, it's recorded, but it just sits there in second place. And it waits until one of those triggers happens. So if you refinance your house in 5 years, that money that was given to you in the beginning of this, for instance, Hillsborough County, that $15,000 would be repaid back to the county so that they can circulate it out to another buyer. So that's how that one works. There's a couple of them that are grant programs that are forgiven, but so the forgiving part of it, if you are on a loan that does forgive, it forgives 20% per year over 5 years. So it doesn't forgive immediately. It'll go 20% per year over 5 years. So if you move out in the third year, then you only owe back the last portion, 40%-ish.
Right. So the DPAs have to be paid back. Most of them have to be paid back.
Correct.
Eventually.
Eventually.
But the one caveat is, number one, that's 0%. Are all DPAs 0% interest?
Yes.
They're all zero.
There's one through the state bond program that's amortized at 3%, but it's a true second mortgage. So you start making payments on it immediately and it goes away in 15 years once you're done paying it, or you can prepay it and get rid of it faster. So that one has an amortizing payment rate on it. The rest of them do not.
How does it work? How does DPA work?
So down payment assistance works, most of the programs come through the bank. So my underwriter is going to underwrite Hillsborough County's loan or the Florida State Bond to their guidelines, but it's one underwrite with us. If you're layering programs, Hillsborough County and City of Tampa, there's a reservation number that you'll obtain from the City of Tampa before you write your contract. They've done an underwrite on their side. They have a set of inspections they want done, and then they approve their side of it. Then we come over to my side and we add their money to the Florida bond. And then my underwriter makes sure one more time that it meets all of the guidelines for both programs, and then we move on. So it's really very simple. And a lot of lenders, if they don't work with the programs, mind you, will tell a borrower, they're a big hassle, don't use them. They're not a hassle. They're basically a glorified gift is what I call them. That's why they're very user-friendly. We do all the heavy lifting on my side at the lender. All you have to do is give me your documents and we take it from there. So the money's out there to be used, and it's really not hard to obtain. There are some requirements, of course. Most of them are household income driven. So anyone earning income in the house, even if they're not on the loan, we have to make sure we don't go over that household income threshold. Again, I'll go back to Hillsborough County's program. Their $15,000 program, you can go up to, I believe it's $69,000 in household income for two people. So that's a big stretch. If you're a single person and you're making $55,000, that program is perfect for you.
Why do some lenders shy away from DPAs? Is it because is it their lack of knowledge of it? Is it because they either they don't know how to deal with it, or they just don't want to deal with it? Is there what's the backstory when it comes from a lending perspective?
Honestly, I'm just going to be harsh. I think it's laziness, in my opinion. They're extra work, but you know what? It's so worth it, right? Because you're helping somebody get money and not raid their 401k to get them in a house. We do have to go through certifications and trainings and that kind of thing, but it's worth it. So some lenders just don't want to deal with down payment assistance because of the extra work involved. For me, I mean, show me a new program and I'm all over it. I'll work on a weekend to get certified in it because it's more that I can offer somebody to help them get in that house and not mess with their savings.
Yeah.
I think that's the biggest thing. And then if you're a mortgage brokers can't use the state bond or the Hillsborough County money. They can only use the municipal money. So again, they have to get certified in it and, be on the lender list for the municipal programs, and they just don't want to take the time. And the reality is there's a lot of explaining that goes into down payment assistance and first-time buyers. They don't know because they've never done it before. So they have a lot of questions. And if that lender is not patient and doesn't want to answer all the questions and only wants to deal with Mr. 280,000 and up,
Yeah.
well, they'll discourage the use of the program just to keep the deal, which for me is that's irresponsible.
Sure.
Just my opinion. I mean, I don't mean to be harsh on anybody. I won't name drop, but if you don't want to go through the certification, there's loan officers at Synovus that don't deal in down payment assistance. So you can't really walk into any random Synovus and find somebody that's certified in these programs. There's only a few of us that have taken the time and want to do them. So I guess that's the big thing, is they want to keep the deal, so they don't really communicate that there's more out there. At Synovus, our loan officers that don't do the down payment assistance programs will call or email and say, hey, I have somebody in my office that really needs down payment assistance. Can you help them? Because we want to do the right thing. And everybody's been basically trained,
Right.
Our loan officers. If you get one like this, send them to somebody that can give them the program. Don't, you have to offer what's out there. That's just being responsible lender.
If I'm working with a buyer and they already have a lender, in a nutshell, most lenders can work with DPA programs.
It depends on the lender. Like mortgage brokers typically don't. The state bond doesn't have any kind of an approval process for a mortgage brokerage
Okay.
for a bank. So those programs would not be something that they could work with. And then if the lender wants to take the time and get certified, absolutely. So my first question normally, when I have a client come to me and say, my realtor told me to call you, I already have my loan in process with another lender. My first question is, did you ask them if they do down payment assistance? Because again, I don't want to hit their credit again if they can get the same thing right where they are already at.
Yep.
I don't want to disrupt anybody's process, and I don't like to step in on anybody's dance just because I expect another lender not to do that to me. So typically my first question is, did you ask them if they do these programs? If they say I did and they don't deal with them and they said they have no way to give me this, then I ask them, remember, you're already in process over there. Have you ordered the appraisal? I just want to make sure that we are all on the same page, that we start over if they come over here. But of course, I'll help anybody that wants, if they need to change lenders for that reason. But again, my first question is going to be, are you sure that they don't do these programs? Because even somebody in their bank, if they're not certified on it, someone else might be, and they can just take over the loan and not disrupt the process. So
Why does it matter what stage they are in the process of the loan process? For example, you just mentioned appraisals. Why is that important?
well, because if they've already spent upwards of $500 on an appraisal at another lender, in order to move over here, it is entirely possible, unless we can get it to transfer over, that they may need to order a new appraisal.
Okay.
It's also another credit pull, which can sometimes, to me, it's detrimental to hit somebody's credit multiple times for no reason. So if we can resolve what they need at that lender, I'm happy to leave the loan where it is and try and help them find a loan officer at that organization. It's not because I don't want to do the work and I don't want the loan, but I don't want the customer disrupted and have another. We're trying to make sure we don't harm them if they need to switch programs or move. So if it comes down to it, then they just come here and we work with the other lender to get the appraisal if we can and that kind of thing. But it's typically they end up coming over because they're with a lender that does not deal with this stuff.
Who offers these programs? I know you mentioned it inadvertently when you were answering different questions, but if we can just kind of identify who offers these DPA programs.
So banks are your first option with the state bond or Hillsborough County. Most of the banks in the area, if you're with a credit union, they do not deal with these kinds of programs. So if you bank with a credit union, chances are your loan officer can't give you these programs. So when you're asking the questions, make sure you call and have a conversation with the lender and ask them, do you deal with down payment assistance? If they don't, the first thing out of their mouth is going to be, don't worry, you don't need that. Or we have a program here that will help you. Listen to what their program is, but then call another lender and ask them about if they work with the assistance programs, just so you can compare the two. And you can do that without having your credit pulled. Yes, you can. That's another big thing. Well, until I get a credit report, I can't talk to you. That's not true. I can have a conversation with you all day long. And I like to talk, if you can't tell. I can have a conversation all day long and tell you all about the area programs, and then you can figure out which direction you want to go and then come back to me. I'm not going to pull your credit until you're sure you're coming here, because that's not fair to you. I can't give a pre-qualification letter without pulling. I can have the conversation and explain the programs and all that stuff. That's easy. And that helps you get all the information so you can make your own decision about your finances. That's the name of the game.
And what kind of programs are available out there? I know different counties might have different programs, but generally speaking, what programs are out there?
There's Hillsborough County has several. Hillsborough County Home Sweet Home. That one is only available in Hillsborough County. The Florida State Bond has 4 or 5 different options under their umbrella. That one can be used anywhere in the state of Florida. City of Tampa has 2 programs. One is East Tampa CRA, that's 15,000. The other one is the DARE program, and that is 30,000.
Okay.
It's forgiven. That's a grant. It's forgiven. Pasco County has a program, not a ton of money up in Pasco, but there's some, and we can layer that with the bond because the bond can go anywhere. Pinellas County has the regular Pinellas County loan. That one's taken a really long time to process through though. So that's going to be a tough one in this market. It's a lot of money, but you know, at the end of the day, it's very hard to move fast enough for this market. That one's 40,000. If you have a seller that'll wait, they're at least a 60-day term.
Oh, wow. Okay.
That's hard to sell that to a seller. So there's that one. And then there's Pinellas County Housing Finance Authority. There is, again, the state bond you can use over there. There is City of Clearwater and City of Largo. Both of those are 45,000. And then City of St. Petersburg has two different programs. One is the CRA program, Community Reinvestment Act, meaning that's a census tract driven program. So I'll go granular. This is a lot of information. So every city is broken up into little grids. And when they send out that census tract questionnaire, this is how they break up the city into those tracts. So they're asking you income information because they want to figure out how many people live in this area at this income level. So when they assign a census tract, low, moderate, middle, upper, that's what they're gauging that with, is the census information. One of the programs at the City of St. Pete is specifically for low or moderate census tracts. Now, don't let low or moderate census tract worry you. There's nothing to worry about there. There's pockets of low to moderate census tracts right around International Plaza in Tampa. So you would think International Plaza, it's got to be an upper census tract. It's all rich people live there. That's not true. So there's a couple of pockets of low to moderate right around that area that we have 100% program at the bank that you can get 100% financing. If you're in that lower moderate tract, you can make $500,000 a year and still get that program.
Oh, wow.
So that the income cap goes away on that specific program when you're in that census tract. Same with City of St. Pete. They have income restrictions on their city program, but if you buy in their census tract, that income requirement goes away. I just did one for a client a month ago, and they collectively made about 70,000. So they made too much for the city program, but I used Florida bond and the St. Pete CRA, and they ended up with, that's a $10,000 one. So I combined the two and they got 17.5.
Oh, nice.
Now the state bond program has moved their FHA one to 10,000. So that same client could have potentially gotten 20,000 with that example.
Oh, wow.
Ways that we can stack up. There's ways that we can, move this around so that, you'll get the most for your money.
So DPAs work with all types of mortgage loans, right? So you just mentioned FHA. Does it work with conventional loans as well?
Yes. So they're one complete package. So for instance, the state bond, they have an FHA program. It's their first mortgage that we originate on my side and the down payment assistance. So they create their own first mortgage. So I can't use just the DPA on one of my loans. It has to go in conjunction with theirs.
Okay.
The municipal programs, City of Largo, City of St. Pete, those I can attach to that 100% program if we need to. So those can attach independently.
Got it.
Makes sense.
Now, yeah. Are all the programs available to all people? Meaning, who would qualify for these different programs?
Well, the reality is there's something for everybody because they're all income driven. So the Florida bond has a program that goes all the way up to $103,000. If you make $103,000, you can still get some form of assistance. So it gauges it based on your income, how how far we can go. If you're over the income for one program, you may be able to qualify for another one. So the reality is there's such a wide range of programs available that it's hard to pinpoint a specific answer to that. So anywhere between, $30,000, $20,000, all the way up to $103,000, we can find a program for.
What sort of qualifications does a buyer have to meet in order to qualify for a DPA? And then we'll go into the actual home itself, the actual property itself, if there are requirements for the property.
So the borrower, they're household income driven. So we need to know how many people are working in the house and how much they make. That's the first step to figure out what program we're going with. Okay, so borrower requirements. Most of the programs require at least a 640 score in order to obtain the down payment assistance. City of Tampa is a little bit of a lower score. So if you qualify for an FHA loan at 620, we can still use their program. So that would be not a bond program. That would be a straight FHA program with the City of Tampa on top of it.
Okay.
The Hillsborough County, Florida bond, Pinellas County needs a 680, their score. If you have a 680 with the other municipalities, if you have another 680 score with the other programs, we can go all the way to 50% of your income as far as qualifying you for a mortgage. So it'll let you go a little further if you have a 680 score, but the reality is we need 640. That's a good threshold to get to. And then if a lot of borrowers ask me, well, if I have an 810 credit score, will I get a better rate? On some of the programs, yes, but all of the bond programs their interest rate is driven by the servicer. We can't change the rate. So if you have a 640 or an 840, you're going to get the same rate on the bond programs. It's also the same program, lender to lender to lender. So when they say go out and shop rates, we all get the same rate. It's the same program. So be careful going to different lenders, asking for the same program, because we're all going to hit your credit and give you the same exact answer.
Oh, wow. Okay.
Another one. Yeah. Be careful of that.
So we talked about the buyer requirements. Now, what about the property requirements? Are there certain properties that they can, in terms of price? You did touch upon area in
Yes.
certain loans.
Hillsborough County has a cap on their program of 283,000 and a little bit, maybe 283. I can give you the income caps or the purchase price cap. Most of them have a purchase price cap. I think the bond is at 311,000. So they're a little bit higher. As far as areas, you can go anywhere as long as it's like Hillsborough County's program, you can only use in Hillsborough County.
Sure.
The property itself you have to be able to move in and live there. Your property requirements, the house needs to be in livable condition. So we can't do rehab loans with this product. So we can't buy a house that needs to be fixed up and use the down payment assistance program to facilitate that. The house needs to be able to be lived in. It also needs to be either a single family home if you're using an FHA program or a townhouse. Condos are harder to finance on FHA programs simply because not all condo complexes are approved with FHA. So if we have to go out and get that approval on the FHA, that can take 45 days by itself to do that. So I usually say, stay away from condos if you're using an FHA loan. If you're using a conventional loan, no problem.
Right.
If you're using conventional bond, you can open the door to the condos. If you're using FHA bond or anything having to do with FHA, I would stay away from condos. Mobile homes, we cannot finance. FHA will, that's true, but down payment assistance won't. So we need to stay away from mobile homes. Anything that is in distress, like major distress, there's a hole in the ceiling or the roof, that kind of thing. It can't be in disrepair. You have to be able to literally move in and live there. If it's ugly, it can be ugly as long as it's livable, because you're going to go in there and probably do something to change it. But it just needs to be able to be lived in. Foreclosed properties are fine, again, as long as they're in livable condition. Short sales are fine as long as they're in livable condition.
One of the questions that I get a lot is, well, I don't have enough money and I need to come up with 20% down. So I need to save. I can't buy right now because I need to save. Is that a myth?
That's a myth. We need 3 or 3.5%, and we're going to get that from the program. So if we're using the state bond, we're going to take that 3 or 3.5% out of that $10,000 that we have. Or Hillsborough County, we're going to take the 3.5% that's required for the down payment from the money from the bond authority. At this moment, I can usually put more money down out of the Hillsborough County program because there's that additional 5,000 that they added. So we have 15,000 available in the Hillsborough County program. So what I normally do is I take the required amount, put it down in the down payment, save the rest for closing costs. If we find a house and they would rather put more money down, I'm going to try and make that bottom line 0. We push enough over here with the bond money to the down payment and save just enough just to cover the closing costs and make sure that they come to the closing table with little or nothing. I just did one yesterday. The girl would be coming in with like $250.
Oh, wow.
Yeah. I've had clients where we zeroed them at the table where they didn't bring anything. They brought their earnest money, their appraisal, paid for their inspections, and that's it.
Nice.
And I love doing that because then their money stays in their bank account where it belongs. So there's no financial stress.
Very nice. How can buyers take advantage of this program? What would be the steps?
The first step would be to contact a lender that works with the programs. The only way to do that is either to ask your realtor if they know someone, or always you can call me and I will help you. That's the first step. So if you are a true blue Wells Fargo client and you want a Wells Fargo loan officer, then go into Wells Fargo and ask who in your establishment works with these programs, because not everybody does, and they have to be on the list. So Hillsborough County has a list. Florida State Bond has a list. So the way to access those, I can give you a link, floridahousing.org can give you the list of approved lenders. Anyone on that list has done at least 4 loans in the last quarter. So that if they're on the list, they're actively working with the program. If they're not on that list, but they say they're certified in it, I would maybe ask a few more questions, just because if they're not doing them actively, you could run into some problems. But that's the way to take advantage of it. Literally, I mean, please call me, but if you don't find my personality to be sparkling, then ask your bank if they have someone that works with down payment assistance and first-time buyers.
In today's market, with sellers, it's a seller's market. There are literally no homes up for sale. So the process itself is moving very, very fast.
Yes.
Buyers who take advantage of DPA programs still compete in a hot seller's market like today?
Absolutely. Because we move as fast as we can on my side. So you can write a 30-day contract and I will move heaven and earth to get it done in 30 days. If for some reason we need a tiny extension, we'll either ask the seller for it. Usually it's the TRID requirement at the end that'll trip me. So if it's a TRID requirement where we can't get the CD out in time to meet the date, but we need 2 or 3 days after, there's a clause in every real estate contract that gives you up to 10 days if it's TRID related. So we could play that card. I typically have a conversation with the seller's agent and just say, hey, look, we just need a couple of days. This is final approved. I just need to get my CD out, or there's one more condition I need to get. Can you cut me a break and give me a couple of extra days? I haven't gotten a lot of pushback on extensions. Knock on wood. But the reality is, at that juncture, it would be very hard for that seller to just up and walk away, in my opinion. Now, that being said, we do have the constant threat of, I have backup cash offer waiting. There's always that constant threat. The reality is we will go as fast as we can. My struggle normally is getting the documents from the client. So if you're listening and you're a borrower, please send me I'll send you a list, send me everything. And once you have a contract, I may need to just update stubs or a bank statement or something little like that. And we can move right into underwriting. I've had it, the last two that I've gone under contract with, they were in underwriting within a day. And their documents, they have to sign their documents before I can order the appraisal. But we were ahead of it because they sent me everything up front. I load it all in, send it in for disclosures, and then move it on to underwriting. And we're turning files back out of underwriting in about 3 days, 3 or 4 days. So I have a conditional approval before I even have the appraisal.
Can you send us a list? Maybe we can have a link to it or something.
The list of documentation that I need?
Yep.
Sure.
And we can have that, and that way they can have that ready.
Mhm.
Because it's going to be more advantageous for the buyer to go into to go into an offer when they have the underwriting approval already done. It
Exactly.
eliminates that much work and that much time. So the only thing that we'd be waiting on essentially would be the appraisal.
Yes. The appraisal and any other, maybe something small my underwriter might ask for. But like, please explain this deposit over here.
Yeah.
Not a big deal. One word to the wise about deposits. If you sell your couch, don't put the money in the bank. Take that money, put it in your pocket, buy your groceries, buy your gas, do your day-to-day stuff with that cash. If you put it in the bank, I need to try and explain it. Where did it come from? Cash money that you have in your house in a shoebox. First of all, that's a very dangerous game to play, to have thousands of dollars in your house. That's just my opinion. Everybody's different. But I have buyers that say, but I've been saving this money for my house, and the only way I can save money is to put it in this shoebox because then I won't spend it. Please don't do that. If you've done that, it needs to get in the bank. If you're already in the process of buying the house, we'll need to figure out, can someone give you a gift for that same amount of money? We document it with their bank statement, not you don't deposit it yet. Don't give it back to them yet. We'll get a gift from Aunt Millie. She writes a gift letter, gives you the $2,000 that's under your bed. We document it with her bank statement. And then after you close, you take your shoebox money and give it back to Aunt Millie. There's ways we can work around that stuff. You have to be careful with cash deposits because it's a Patriot Act thing. They make us source everything down to $100 deposit because that's just the rules. Now, they're in place simply because years ago, buyers would go to an ATM with their credit card after I pulled their credit, take $2,000 cash advance at 30% interest, makes my head explode. Take that money, put it in the bank and call it a gift. Or give it to Aunt Millie. Aunt Millie then filters it through her account and back to the buyer. And it's really not a gift, it's borrowed because now it's on the credit card. So they put stops in place for that kind of thing because it ends up messing us up at the end because now there's more debt that I have to account for because they took a cash advance.
What steps do you take from a lender perspective in terms of looking at the buyer's funds, bank accounts, bank statements, and checking on their employment history, that sort of thing?
So processing, once I have everything and I've loaded it into the file, I'm going to go over the bank statements and make sure there's nothing in there that the underwriter is going to ask me for. An explanation of this $100 deposit, or your borrower's name is Mary Smith, but who is Joan Jackson that's listed as an account holder with her?
Yeah.
Then I need to get a joint checking access letter, have Joan sign it, and we're good to go. Little things like that, I try to catch on the front end so that the underwriter doesn't have to ask. It's one more line item that I don't need to have come back as a condition. So I'm going to go through those. processing's gonna double check me. Then we're gonna order out our verifications, verification of employment, verification of rent sometimes we'll need. We're gonna contact your landlord. If your landlord doesn't want to talk to me because he only will accept cash from you, then we just have to make the effort to get a hold of him. And we have to explain that I pay cash for my rent. Here's where it comes out of my account. My landlord won't give me a verification. Some landlords think that I'm the FBI and I'm going to turn them in because they're not paying tax on the money. I don't really care what he's doing with the money. I just want to verify that my client pays on time, but sometimes they won't answer the question. So there's that. So that process, my processor is going to go through all that. They're also going to order out tax transcripts, meaning what you give me in your tax return copy needs to match what Internal Revenue shows as the return. The reason we do it that way is, again, many years ago, before probably half of you were born, there were people playing games with their tax returns where they would give me a copy of a 1040, but file something entirely different with Internal Revenue. That's a problem. So we need to make sure that those two things match. That's why we ask you for your tax forms up front, your 1040 tax return. We're going to have you sign them. And then we match it to what's with the tax transcripts. For first-time buyers, we need 3 years taxes. We need that because that's how they show that you have not been a homeowner for 3 years. So HUD's definition of a first-time buyer is someone who has not owned a home in the last 3 years. So if you owned 10 years ago, but you haven't owned since, and you don't still own, you're a first-time buyer. So the only exemption on that is veterans. Veterans are exempt from that. They can sell a property last week and buy another house in a month, and they're considered a first-time buyer. That's just another caveat. Thank you to our veterans that they get exemption.
Absolutely. Do you have any last minute thoughts, any recommendations for giving first-time home buyer, first-time home buyer tips, so to speak, from our lender perspective?
Big things to stay away from: car dealers and furniture stores. Okay. Don't buy furniture for a house you don't own yet. It's a bad idea, and it will get you in trouble with us, because even if we've run your credit, now the car dealer thing will start there. Car dealers are going to tell you, don't worry about it, won't show up on your credit for 30 days. Well, the loan won't, but the inquiry does, which leads me to have to ask you, did you buy a car? Let's go back to the car. A car dealer is going to tell you, you're fine, you're safe. Lender already ran your credit, don't worry about it. Well, we're going to run a refresh at the end. 3 to 5 days before you close, we run a credit refresh. And any inquiries that you've done from the first time I pulled your credit to that moment, they're going to pop up. So I'm going to ask you, why were you at Brandon Ford, right? If you bought a car, it's going to stop us dead in our tracks, even though the payment hasn't started yet. You opened a new line of credit. Here's why this is vitally important, guys. You're going to get to closing and you're going to sign an affidavit that says nothing has changed in your financial picture. That can be construed as bank fraud if it's not true. So we had a client, it wasn't my client, it was a coworker. She comes flying in my office, this is years ago. One of my bond loans, we have to take it back. And I said, what happened? The girl bought a car the day before closing and then decided to sign the affidavit saying nothing had changed. Well, when we moved it on to the servicer, US Bank, they sent it back saying, there's an inquiry on here. What's with the car? We asked her, she owns up to buying the car. Now, instead of having at the time a $15,000 forgiven loan, she's paying it back to the bank now because the bond servicer wouldn't take it. She was over the ratio.
Oh, no.
Yeah, she did it after the fact. Had we found out about it before she closed, she wouldn't have closed. So these are things where you're floating down the river in your canoe. Don't shoot a hole in it, because I can't help you. Once you do something like that, my hands are tied. I can't do anything about it, and it will stop you. furniture stores. You guys, if you go to a furniture store or a car dealership, if you've seen the movie Jaws, you should hear that theme song, dun, 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 playing in your head. Don't do it. Furniture stores are going to watch what you're looking at, $5,000 worth of furniture. They're going to offer you a $5,200 credit line till 2090, right? You have
0% interest.
and zero interest till 2090. Whoa, it's a great deal. But they're going to only offer you $200 more than the package that you want. So you're going to tank your credit score and max that card immediately. Please don't do this. It'll stop you because now I have to add the furniture payment onto your debt to income ratio. Bad idea. Those are tips, and I promise it happens every single day. Every single day. And I say it, and there, I put it on the bottom of my email. Don't open any new credit. Target. If you're watching this video and you work at Target, I mean no disrespect. They ask you every time you check out, would you like to save 10%? I'll give you $3 not to do it because it's an inquiry on your credit report. And we're going to ask you, and it could change your score. Don't do it. Okay. Utilization of credit cards. Try and keep your utilization, your usage to 50% or less. 25 is optimal, 50 at the bare minimum. So if you have $1,000 credit card line and you're at $800 right now, we need to whittle that back until you're just under $500. It's going to help your score, and it's going to help your debt to income ratio, because the closer you are to your limit, the more it's impacting your score.
Yeah.
Now, don't pay it off. Not asking you to pay it off. Just whittle them down. Continue to use them, but pay. Use them, pay them, use them, pay them. So your credit score keeps moving forward and doesn't stagnate, but you're not maxing things out. That can create problems too.
Absolutely.
Be super careful with your credit is the big one.
Now, what about the employment piece of it? Do you check that as well right before closing?
We do. And it has come up. It just happened last week, not to me, thank you, where they lost their job 3 days before closing. And they had no intention of saying anything either. So this is where honesty becomes a big, huge part of this. We need to know if something happened, because we can work with the agents and get it fixed. I had a girl that got furloughed because of COVID. We were within her week of closing. She called me absolutely hysterical. I said, okay, we'll fix this. Hold on. We put the loan on the shelf. I said, when do you expect to go back to work? She said 3 weeks from now. This is back when the market wasn't crazy town.
Yeah.
Wasn't living in the house. It was an investment property for him. He knew we were good to go the moment she went back to work. He not only allowed her to move in the house, but waited until a week after she was back at work. And we closed a week after she went back to work. Not a big deal, but we need to know about it. So if she would have called the agent and said, I got furloughed, he may have said, well, I'm not going to wait. But because the buyer's agent, her agent, and myself spoke to the seller and assured him that we are good, we're cleared, we're in closing, but we have to stop because she got furloughed and I can't move forward till she goes back to work. We can work on just about anything, but I need to know about it in order to fix it.
Yep.
Yeah.
Absolutely.
It's teamwork. Teamwork makes the dream work.
There you go. Good final piece of advice there.
Mhm.
Okay, I think that wraps it up, Ruth.
Oh, there's one more thing I wanted to mention.
Please go ahead.
Okay, so the state of Florida has specific laws in place as far as married or not married. So if you're separated, the state of Florida does not recognize separation as a legal form of marriage. So if you're separated and you have no intention of getting back with this person, you need to make that final divorce before you buy a house, unless the person is very cooperative, because you need to understand that by Florida law, it's their house too. So they need to sign all the documents, even though they're not on the loan, because you're still legally married to them.
Yeah.
They can also move in the house. which if you're separated, I'm pretty sure you don't want them to move in. By law, they can. So that's, I'm all in favor of love and marriage, but the reality is in the state of Florida, there's no, you're either married or you're not. It's pretty down the middle.
Yep.
So there's no gray area there. So typically in my classes, that's where I see a few people are about to pass out and fall off their chair. I'm like, well, and if they're incarcerated, that's an easy one. We just need access to them, send them the documents to sign. That's not a big deal if they're incarcerated. But if you don't want them in your life and you don't want them to have anything to do with the house, then that's the conversation you need to have with your lender. Because we do find out that you're married. It's not something we can hide. So there's that.
So how can people get in touch with you?
My phone number is 813-440-7377. I'll say it again, 813-440-7377. My email is Ruth Principe, RUTHPRINCIPE at Synovus, SYNOVUS.com. Or you can ask Randy because he has my information.
There you go.
There you go.
When they reach out to you, they're not obligated to A, work with you, or B,
Correct.
you don't necessarily pull their credit unless,
No.
yeah.
Not unless they're ready. If they say, I want to go ahead and do a credit pull, then we'll do a credit pull. But that doesn't, I can have a conversation without doing that. And even if I'm not your lender, I'm going to give you the information that you need because you need to have the correct information so you can make the right decision. So if you're already with a lender and they don't work with the programs, I can talk to you, tell you all about the programs, and then you decide, is it worth at this moment in my transaction, should I or shouldn't I move over? If you want to do that, then of course, we're going to help you go as fast as we can. And that's a conversation you might want to have with your realtor too. I mean, ask Randy if he thinks it's a good idea at this moment to move. I mean, if the seller is going to be a pill about it and not extend or help us out, that might create issues that you don't want to have to deal with.
Sure.
Mhm.
Ruth, you've dropped a lot of knowledge here. You've dropped a lot of great tips for especially first-time home buyers. I really want to appreciate you. Thanks for your time again. So this is for everybody. Again, this is the second take that Ruth has agreed to do this with us. So thank you so much. I really appreciate it.
You're very welcome. You have a fantastic day. I can't wait to see the video without my coughing.
Yeah. Ruth, thanks a lot. You have yourself a great weekend.
Thank you. You too. Have a good.
You too. Bye.
Bye-bye.